Hey everyone, welcome back to my channel. If you're new here, I'm Stephanie and I'm documenting my 10-year journey of growing a $1,000 investment account without adding any other funds. And before we get started, I just want to read this disclaimer to you. You are responsible for your own investment decisions. Do not use any information on this channel as a means of investment advice. These are just my ideas. And if you've been following me for a while, you know how erroneous those can be. And I will continue to misjudge the market at times. I make the best decisions for my portfolio based off of my thesis. Your decisions must come from your own research. Don't copy my paper. Do your own work. In this episode, I'm going to be looking at Grab Holdings. The ticker symbol is GRAB. It's a ride-hailing and delivery giant based in Southeast Asia. And I'll work through why I decided it would make a great addition to the portfolio. So let's go. Before I buy any stock, I ask myself 5 key questions. And if you don't know what those questions are, you can take a look at those in the linked video here. Today, we're applying that framework to Grab Holdings. It's so interesting. Co-founder Anthony Tan launched it with a powerful vision to solve Southeast Asia's dangerous and chaotic taxi system. This was a system that was plagued with inconsistent customer pricing and driver pay. The vision has since evolved into something bigger, a tech platform that delivers transportation, food, groceries, payments, and financial services all in one app. Grab is Southeast Asia's Uber, DoorDash, and Venmo all combined in one app. I learned about Grab at the Faith-Driven Entrepreneur Conference in 2023. I'll link his interview in the description below. What really drew me in is that it was built on the belief that business could help society and be profitable all at the same time. That double bottom line is what made me take a closer look at the company. Grab now serves over 500 cities in 8 countries, and they're still expanding. Grab isn't consistently profitable yet. They posted their first profitable quarter in Q4 of 2023, and I believe that they're headed in the right direction. In Q1 2025, Grab reported $773 million in revenue, and that's up 18% year over year. And their free cash flow over the last 12 months was $157 million. They're improving every quarter. Just last month, Grab issued $1.5 billion in convertible senior notes. What is that? That's basically a zero interest loan that can be converted into stock at a later date. And the price for that stock is $6.55. That move gives them flexibility and cash, but it also adds complexity to their financials. If the stock goes above $6.55 in the future, the debt turns into more shares, which could dilute existing shareholders. Dilution is bad. And yet, if Grab appreciates 25%, they're most likely doing something right. So I'll be watching closely to see how they manage that. Southeast Asia's digital economy is booming, and Grab still has a huge runway for growth. Their monthly transacting users are only 6% of the population. They're growing across all sectors. That's ride hailing, that's food delivery, that's grocery delivery, financial services, and even advertising. In Q1, their delivery segment grew 17% year over year, and that's even during a slow season, which includes Ramadan and Lunar New Year. Plus, they're expanding into new markets across Singapore, Malaysia, and Indonesia. Grab is a category leader in on-demand services in Southeast Asia. Over 60% of users use more than one of their services, which means the ecosystem is working. They've won licenses to operate taxis in Singapore and are even experimenting with autonomous vehicles. They're not just competing, they're leading. Do I understand the business? Yes. Do I see the risk? Also yes. The socio-economic climate, the convertible notes, the complexity of operating in many countries, those are all real concerns. But the mission behind Grab is strong. They're solving real problems, and I love that their core values started with social impact. Over $5, it's too expensive for me. I'm waiting until the next pullback to start a new position, and I'll wait patiently. I don't chase. I want to build wealth, not FOMO into hype. Is Grab the perfect stock? No. Is it a business that is worth watching, learning from, and possibly owning? For me, absolutely. Let me know your thoughts in the comments section. Lastly, I want to give you a quick update on the portfolio. Right now, the only stock I own is CNC, which is Centene Company. I bought it at $34.30 and it's currently trading at this taping around $30, which means I am down 12.5%. That's really not how I wanted to start this experiment, but I'm not really panicking. This is a long-term investment. The company hasn't given me a reason to sell, so I'll be listening in on their earnings call next week, and unless I hear something that changes my thesis, I'm staying put. This is what it means to become a real investor. I buy based on a plan and stay calm when the prices move. Remember, my mission isn't to get rich quick, it's to build a thoughtful portfolio on companies I understand, believe in, and can sleep at night owning. And that starts with asking the right questions and buying at the right price. If you got value from this, don't forget to like, subscribe, and share this video with someone who thinks this is a terrible idea. And let me know in the comments, what stock are you watching right now? Until next time, start small and think big.